Hello, Warriors. Let's have a great week. How are you? How you doing, Alexander and Bran and AJ, Jamie, Ryan? How are you? Paul, Laura, everybody. So we have the dollar up a bit, dollar down a bit today.
Yep.
So did you stick? Did you stick, Ryan, with the longs from the other day?
Yeah. I bought it all the way down. Well, euro dollar down to the big figure. We'll see what happens. We'll see what happens. I'm not going anything guns blazing.
Okay.
Keep it fairly tight.
Yeah. So risk on today. Is Kman back with us?
Yeah, he's back with us.
Dale. Hey, everybody.
Hey, buddy. How are you?
Yeah, very good. Thank you.
Good. Any are your feet? Are you back in the saddle?
I am back. I'm back in the saddle. I am.
Okay.
Yeah.
Okay. So how do you ride the yen, or do you leave it alone?
Well, as I said this morning, I don't really ride a lot of it because it's getting pushed and pulled by various factors. One of which is, of course, risk, and then the rest is still a bit of nervosity about what MOF may do. And as we've seen, if you look pure FX, I'm not talking about gold or anything else. If you look pure into FX, Swiss has been the one currency of choice, really. Yes, yen pairs are a bit lower, but then the dollar yen is very little changed, and we still can't tackle this 150. So I'm not really looking at having too many positions in the yen right now. I'm a little long dollars from last week in euro and sterling, but yeah, the rest it's gonna be as headlines roll in, and I don't know if the yen is really your best currency to express any risk feelings in, right now.
Okay.
Still struggling with that big differential in interest rates as well versus any other currency really. So it holds me back from trading too much risk in the yen. I think there's other pairs also which are a bit better if you look at stuff like the Canadian dollar, or where the numbers are pretty okay, where Bank of Canada is still hawkish, where oils are still trading higher. So that may be a bit of a better currency, perhaps. I'm looking at stuff like Euro CAD, so any rebound may be offering a small opportunity. So that's a bit how I look at it to start the week. And then, of course, yeah, the metals, they have put in a really strong performance while I was off. So
wow, yeah,
ones are going to be very closely monitored. Yeah, 1930 around in gold, 22.75. You have it there in silver. Those are very interesting levels. And then, of course, on the way back down, if the situation quiets down a bit, if you look at the 1900, and then that I've got the first levels on silver I have is like 22.25, 22. Those are the levels on the other side that I'm watching at to start the week.
Okay, just my observation: lower high in Dixie, lower high in Canada. In fact, USD CAD looks weaker than the dollar right now. So maybe we peaked for a correction again here in the dollar, and maybe we're going to pull back to these levels that we know that back under 105.5. Let me just draw a line. That's going to be a pretty negative signal for the dollar right here.
Yeah, that's the line, isn't it?
I'm sorry, go ahead.
Kind of the line in the sand here a little bit.
Yeah.
So another possible descending triangle. Anyway, That's the way that looks to me. We're getting a pop in the S&Ps. So I guess, you know, if the S&Ps are going to make hay and they don't look great after failing from 4,400, what do you think? We're holding. NASDAQ's weaker, which is a change.
You know, and good morning, guys, and good morning,
Hey,
Dale. I just think it's you know, the fact that the market didn't fall apart over the weekend, and you know, it's just kind of giving everybody a little bit of ease. But you know, I still look around, and you know, even though there's been a slight pullback in gold, and you know, VIX is down a little bit this morning. It really, you know, the market still seem a little edgy at this point.
Yeah. You know,
Yeah, very much so.
you know, I look at, I don't think the dollar is peaked, but we could have another correction. I still think we'll see 109. But I look at, I guess Apple has some kind of negative news, not down that much, $1.50, but they say that the Huawei phones are outselling Apple. I mean, you know, if you lived in a totalitarian regime and all the government guys weren't using Apple anymore, would you buy an Apple? And Yahweh, I think they're cheaper anyway. So,
Yeah.
you know, that's what's happening. G.
Yeah, but they don't keep the doctor away.
Huh?
Huawei don't keep the doctor away. Apple does. An apple a day keep.
Oh, I get it now. Yeah.
I got that one, Kman. Welcome
God.
back. Bam, we
Yeah.
missed all this great humor.
Yeah. That tells you how with it I am.
Yeah.
It's
Dale,
Monday.
hey, Dale, it's Monday, and you sound tired, buddy. So I want to ask you guys, what do you think? Because you know, this, fortunately, nothing major happened over the weekend. I actually thought, I was thinking this morning as I got up, you know, the first thing I did is I checked headlines, and I'm like, did an offensive start overnight? Are you surprised, Dale, that nothing major happened in Gaza over the weekend?
Well, you know, there's a lot of pushback just with the shelling, with what's going on right now. And no, you know, I'm more surprised that the UK sent 2 aircraft carriers to join our 2 aircraft carriers. So to me, that was, you know, maybe that's why things are calm. Maybe people think that that show of force is going to stop Hezbollah from opening up another front. But I don't know. They're probably still going in, Blake.
Yeah, it's Iran, isn't it? That's what all the ships are doing there. That's the bigger threat than what's happening between Israel and Palestine. That Iran get involved. That's what the market's going to sit up and take notice of.
Yeah, I mean, there's just a headline here. It says possible expansion of war is approaching an inevitable stage, and that's from Iran, and that just came out seconds ago.
Yeah,
so I mean,
like
yeah, and we've seen just a little bit of a reversal on the dollar Mexican peso, for example. I mean, it was just trading to lows and just reverse. So I think we have to be really careful here. I mean, there's, you know, obviously the market's pretty on edge, and I don't, you know, I know people are probably thinking, okay, it's time to stick, you know, stick our toe back in the water. Holy cow.
I'm tired and you're tongue tied.
I'm tongue tied. I'm still tired and tongue tied.
They shouldn't be.
Yeah. Well, my bet is that we'll take out 4,200 before we close above 44.
Yeah, I don't disagree with that actually at all. So yeah,
that's what I'm thinking. You know, 4160 are some Elliott targets on an extreme basis. If it really gets heavy, then I think that we could trade down to this weekly moving average. Forget the spaghetti. This is the 200 week at about 39.5.
Yeah.
And, you know, so, you know, I still think it's vulnerable for something like that. And you brought up the VIX, like as long as it's above 18, and, you know, to me, it looks like, you can't tell on the weekly.
Also,
Yeah,
Iran
there's
says
18 level.
time for political solutions in Gaza is running out.
Over.
Another
Yeah.
headline that came from Iran. So yeah, they're getting
Yes.
vocal, which makes
Yeah,
sense.
maybe they want this conflict. I mean, they started it. Maybe they want it. So, the VIX,
go ahead.
anyway, VIX put in a pretty good week. In fact, it was up a lot compared to the drop in the market Friday, which tells me, people have been making a fortune selling volatility for the last couple of years. Even during the big decline year, they made more money selling vol than buying vol. And that may be a squeeze situation because, you don't change someone's habits until it's painful, right? And I think that before we have some type of decent low, we'll get a 30 reading in VIX.
All right. Well, Dale, I'm gonna take over real quick because I'm gonna show you guys a
Thank you
little
very
bit
much.
of something you should probably be paying a kind of close attention to here. Let me just pull up crude really fast. You can see that crude's actually getting a little perky this morning, and you can see it popping up right up against resistance right now.
Yeah,
it's just getting up there, and actually you can see it right here too. You can see how it's pushing right up against resistance, and I think we got to be a little careful. I mean, because crude is one of those assets that it's kind of like it's kind of like your early warning system, with this whole conflict. This is where the nervousness actually shows its rears its ugly head first. I would think would be right here. So we start popping above this 88.30 level, which has been a really key pivot in the market. I think that's going to be it. So let's let me ask you guys this. So Ryan, this morning it was obviously really quiet in European trade. I was so quiet that I was, when I was uploading charts this morning into our community, most of it was just commentary just from where we're at versus like updating, kind of alerting people like these are some trade setups. It's just kind of like this is where we're at, and we're probing some pretty key levels. What did you and Kman notice this morning as far as key levels go, or developments go?
Only that you got to be careful with your levels. Look at gold; it just carved up through the levels. You've got to be careful. Every day we trade fundamentals, central banks, all that sort of stuff. Now we've got a risk event that's taking front and center, and you've got to respect that. You don't trust the text as much. You go a bit wider on your charts. You pick the bigger, possibly stronger levels. Above all else, you protect your account. You do exactly what the market does. It protected itself on Friday. It continues to protect itself. We've got to do the same. Watch your levels. You can say, gold held 1930s here, which was a previous support and resistance point. Okay, that's great, but that came after a 70-80 buck move, so it's natural it's going to run into stickiness somewhere. But would you trust it if there's another headline? No, it could be at 2000 in a blink.
Really quickly,
yeah. So
what could take it back down towards the lows again? Peace,
resolution.
Resolution, right?
Resolution or an offensive by Israel that doesn't spill over into Iran kicking off and all that sort of stuff, and then the market will use the same mentality as it is for the Ukraine. It's in its own bubble. It's not really affecting us, so we'll get back to ignoring it.
Okay, just a playbook I've noticed from Desert Storm. The gold went up and up and up until we did something, and then it fell apart. So if Israel's going to do something, or there is going to be some type of punitive strike against Iran, it looks like they're asking for it, you would think gold would explode, but it's possible. Buy the rumor, sell the fact. I've seen that playbook before, and the market could go down into it and then bottom on military action. Something I've seen in my long and illustrious and killing career.
In the
Yeah,
meantime, that could be another
I was
$100 either way. So
I was going to say that everybody, forgets that, war, and for as unfortunate as it usually is good for the markets from
Oh yeah.
for some reason people are like, oh well, there's going to be all this excess spending on this and that and the other thing. And but I don't know. I think a conflict like this is, to be buying risk on it doesn't make a lot of sense to me. And I think what Ryan, you just said, which is really important, is making sure you're sized up appropriately. Keeping size in check, because we can move in a matter of instant. Just a headline. These Iranian headlines that just came out over the last couple minutes. You can see what happened with, like, here's the dollar mex. This is a good example. You could have been just really on the short side of the dollar mex for the last few hours. You've been on the short side of the dollar mex for the last few hours, and in European trade, and you're like, oh yeah, everything's subsiding, and then all of a sudden you had this nice little profitable position, and in 15 minutes, you've given all that back. All that work over the last 3 hours. I mean, just on just a couple headlines. So same thing with crude. I mean, you got crude that was just kind of dribbling lower, and then all of a sudden it's popped up. It's right near its highs, and if you've been trying to short that thing off of these highs all day, you're thinking, oh man, if this breaks, it's going to break out.
Can you pull up a 4 hour on the WTI? Okay, so yeah, we're at resistance right here. I mean, everyone's thinking it's a layup for $100 oil here, and I don't know. If I was an Elliotician, I would say so far you had a pretty good impulsive move down and an ABC. I don't have the courage to short it because of what could happen, but the tough trade might be to, short crude sometime this week, maybe let it break above the line. But I tell you, I'm really not impressed.
Well, hell's no.
Yet.
Now let me tell you why, Dale. And this is on the week ahead video. I talked about this because this is really important. So we had the bull flag pattern, right?
Yeah.
It was almost complete. Got everybody bullish when we broke out, right? Remember, this is a massive breakout. This is where Goldman said 150. Everybody said over 100.
Yeah.
They got very bullish right into resistance. Obviously, events. Then the next week, well, actually a couple of days later, because we failed like Wednesday or Thursday. Then obviously the events over the weekend, a couple weeks ago, 9 days ago, whatever it was. That put crude oil back below the 38% retracement, got everybody bearish because demand destruction, blah blah blah. Oh, I'm sorry, that was the week before. Then we gapped up because of what happened in Israel, and that got everybody squeezed out. That was short, they got squeezed out. So I don't know. I think from here, believe it or not, I think that we're talking a move that's going to put us back, in the 90s. So, and that's a just nice Gartley pattern that's actually going to set up. So,
all right, nice.
Yeah, I mean, that's my thought. That's why you look, when I look at crude just poised right there under the 88.50 level, it starts triggering stops above that because of some of these Iranian headlines or whatever headlines that we get. That's what puts us back up above, 91, $92. So anyway.
Okay. Thank you.
Yeah, I mean, it just I think about it from people that have been caught on the wrong side, not only on the bulls, the 150 crude oil callers. Then you break below the 38% retracement, and it got everybody out of their bullish calls, or everybody positioned the other way. And then you had the unfortunate events in Israel that gapped us up 9 days ago right there. So sorry, I was just kind of mapping that all out based on current events. Anyway, I don't know, just looking around though, Kman, you missed a lot of volatility because you had to step away and you're gone for a few days, and of course crude's trying to break right now, by the way. We just popped. Somebody's watching the Face show here, Dale.
Yeah, a lot of people do.
Yeah, I know. It's like, but look at it. Like somebody's like,
I know,
okay.
I know at least us four do.
Yeah. There we go. See, they're getting squeezed out as we speak. Where we go is crude hitting new highs. But Kman, you were gone for a few days. We missed you. What are your what the hell is happening? We're seeing a little
Yeah,
bit of
something. Yeah, yields are on the move.
Yeah.
Yeah, I mean, yields are moving, down, and so bonds are catching that. You can even see it in boons are actually popping up here.
That's a thing. We're going to be so headline dependent right now. It's hard to
Trade.
form a firm idea on anything. I mean, that's what I was saying as well on the flow show this morning. If you have like medium term also positions running, then you measure them against what's happening on the geopolitical front. But if you're like more short term, you really have to go with quick flows and quick take profit grabbing, because it's really so fluid, this situation, that anything can happen, right? Too early to call for de-escalation, too early to tell that it's going to get much worse. But then, yeah, and then on the back of it, yeah, it's just too early to start trading fundamentals again, on the real fundamentals, I mean. And if you look at it, stuff is running a little bit divergent right now, actually, because gold, silver, Swiss are again catching a bit, but then the dollar is moving to the opposite side versus the rest. So that's a bit contrary to what you guys saw at the end of last week. So yeah, it's
a tough environment.
I think. I mean, it is if you're like just looking at your lines and stuff and discounting the headlines, you're not going to gain a lot of wisdom, I think, out of these markets. So
yeah, I was gonna ask you, what was your big? I know when you step away from and you in this case went back where you're originally from. Did you completely separate yourself from the markets, or did you kind of have a finger on the pulse of what was happening? Because what was your biggest takeaway from the moves? Just the Swiss being in demand? Because I agree, the Swiss has just been acting a little bit better.
Yeah, I think there's a double whammy on the Swiss, because I think people try to, like, including myself for a while, try to trade the end of the SMB interventions potentially, and I guess there was still a lot of people probably short Swiss, and they had to step out on this geopolitical event. And the rest, I think, if you look at well, the dollar wasn't really moving until we had then the CPI. But then if you take the whole picture from so the week before the NFPs, then you take the PPI, the CPI. If you take this whole picture, and that's mainly the reason why I was a bit long dollars before leaving the desk. Is still dollar positive, that's the global picture if you take away geopolitics. And then if you look at it from a technical or chart point of view, we had a little bit of an overshoot of that 106.1015 level on the euro, but then I said you need to take into account the 106.35 zone, and that capped. And then on the cable, there was the 123 figure 20. We ran just a few pips above to get some weak stops out of the way, and then it reversed. So that bigger picture is still valid in my opinion. But then again, we have to now see what happens. And if you look at the yield differentials between EU and the US and the UK and the US, they're both in slightly in favor of the US, but we are not breaking fresh not breaking fresh width on the differentials. So it's also not like if that fundamentally seeing the dollar should really start to ramp higher from here, but I think it's going to be a grind. And then of course you have the geopolitics. That's about how I look at things right now.
Okay, maybe Blake isn't here.
Yeah.
He may
Fall off
have,
his chair?
it looks like,
Something
his
stuck.
his screen is frozen.
Yeah, something stuck.
Okay,
Oh.
so I'll
Hey guys,
share-
sorry, my
Oh,
my
okay.
internet is my internet's being challenged right now. So
okay.
I'm gonna flip it over to you, back to you, Dale or Ryan, if you guys want to show charts, Kman, up
Yeah.
to you. Yeah,
we have 5
something
minutes.
just
I hate that, Blake. You know, I have a crummy service. You know, it anyway.
yeah, I
Yeah,
usually
These small world countries. Used to
third
bug me up
world
about the
countries.
internet.
That's right. Hey, real quick. You know, I think I should be fine. We had a glitch in the matrix, which is weird for me. But let me ask you guys this: we have bank earnings that, you know, like today we have Charles Schwab. I don't know if Schwab's earnings, they should be out any moment. Actually, what's that?
They're already out.
Are they out? Okay. We have Goldman tomorrow. We have Bank of America tomorrow. Bank of New York Mellon. We have like Tesla, Netflix this week. They're on Wednesday. So we have some pretty big earnings that are Morgan Stanley's on Wednesday. We're getting into the thick of earnings season. And we also have Powell talking on Thursday, which is going to be the you know, he's talking at the Economic Club of New York. So that's going to be a big one because of, you know, what all these wow, look at this nice reversals that we're seeing here. You know, it's going to be a big one because of all the Fed speak that we had this last week, and everybody, you know, kind of running the idea that yields have peaked. So I'm wondering if he's gonna echo that. So Ryan, what's on your radar this week?
Well, we've got a ton of data as well, particularly for Canada. They're the first central bank to report towards the end of October. We've got a ton of stuff out from them from today, BOC, Business Outlook, CPI tomorrow, retail sales on Friday, PPI on Thursday. We've also got US retail sales tomorrow as well, UK CPI on Wednesday, and jobs numbers, wages numbers tomorrow. So there's a lot coming down the pipe data-wise, and we've got the Empire State in about 2 minutes as well.
All right, just wanted to show everyone you're talking about a big move. This is the poster child for AI, NVIDIA.
The big head and shoulder setting up.
There you go. So, and it's called, even with the S&Ps and NASDAQ higher, about 6 lower. So I'm looking for about, you know, 340 or so, maybe even a gap fill on NVIDIA. And if this caves, I think it's really going to damage sentiment. So it led the way up. Maybe this AI, people realize AI is a phenomenal, who knows what kind of thing, but kind of overpriced it into a lot of things. So we'll see. Just wanted to point that out, since we have Gary Kaltbaum coming up here, who's mainly a stock guy, RIA. Why don't we wrap it up with biggest idea, stay flat?
No way.
No way. All right.
You always got to
Blake's
keep
not.
your hand in the jar.
Yeah, the first time I talked to you, you said that. You said you're never flat.
So never.
So what are you working right now, Blake?
I'm still working the New Zealand yen, and actually
Okay.
I've got a short on the Euro yen and New Zealand yen off of those multi-year highs. So
okay, so you need a yen break for those.
I'd love to see some yen strength. The thing is, I'm not counting on it. I figure that it's going to end up being more of the dollar doing the dirty work versus the yen doing the dirty work, believe it or not. So
okay,
I think the
all
yen
right.
is just a kicker, because we've all learned, or at least I've learned over the last couple of months, trying to bet on, you know, yen and Bank of Japan doing something, or Ministry of Finance at this point seems like a losing battle. So
Okay, lower high so far. We'll see. You know, nothing that feels that compelling to me. Last word from Kay. Good to have you back.
Thank you.
Is-
Last word from me. I still believe that the dollar isn't dead, and if I get a decent setback in the dollar on hopefully better geopolitics, it's still going to be a buy, but we have to let it play out first, I reckon. And in the meantime, take good care of your account. And if you don't have a position today, tomorrow there will be another opportunity.
Okay, and you, Ryan, return of capital instead of return on?
Yeah, just take care. That's all. That's the biggest advice I can give this week. Just take care. There's a lot of volatility. We've just seen it. You know, people saying, yeah, this could be, you know, sell the rumor or sell the fact or whatever. Well, you've got to make sure you've got deep enough pockets if you want to start going against some of these moves right now.
It's okay to be a spectator. You don't always have to be a speculator.
I'm more than happy to be flat in some situations.
Okay. Well, you are flat.
Flat. I wish my stomach was flat. I wish my stomach was flat.
All right. Well, thank you, team. Thank you, Blake and
Thanks, Dale.
Kman. Great to have you back in the saddle. And Ryan, you know, you're a tough son of a gun. Anyway, we have some tough guys here, everyone. You know why? This isn't easy. And everyone's had their teeth kicked in. And our job is to help you avoid the landmines we've stepped on. And I know we're doing it. So thanks, team. And I'll see you guys tomorrow. And I'm going to bring in Gary Kaltbaum, who's a contributor on Fox Business. Gary, are you around?
Can you hear me?
Got you, buddy.
I'm trying to share screen and it says
all
you
right,
cannot.
I have to stop.
Yeah.
So
stop.
now it's open to you.
Hold on.
Laura says we're the best team. We're the dream team.
Share.
Okay.
You got me?
Yeah, it's shown the Zoom page, Gary.
Okay, not anymore.
All right. All right. So you tweeted this chart to me, I think. Okay.
Yeah. Well,
All right.
first things first, you just said something that I say pretty much every day on my radio show and when I do my webcast for the peeps, and that is, you think this is easy?
Yeah.
It's a lot of work. It's a lot of focus. It's a lot of time. It's a lot of sweat. It's a lot of toil. It's a lot of questioning. But when all is said and done, if you live by a discipline that continues to work, continue with that discipline until and then adjust. And I think this is just a constant world of readjusting, especially this news-driven, crazy environment from the Fed to the White House to what we're seeing now in the Middle East. So what can I tell you?
I know you've been around for a while, Gary. Have you ever seen so many pots bubbling on the stove? I mean, we've run out of burners to put a pot on.
Well,
you know, go ahead.
You know, I start with what they're doing in DC with 33 trillion in debt, 2 trillion this year, and it's going to escalate even further. Major deficits. Then you have one man playing God with markets for the last few years that created all these distortions. By the way, the latest distortion, which is all on his back, is nobody's going to trade in a 3% for an 8% mortgage, so nobody's selling houses right now. That'll eventually blow up. That's all Powell. On top of that, the reason why you're seeing a Bank America stock at a new yearly low is because of the big losses they have on their books by buying long and losing their you-know-whats. And just remember, everything Powell did and the rest of them enabled Austria to do a 100-year bond at 0.8%, and it's sold out, and it's down 60 some odd percent from the high. So the distortions that are out there.
Should I get out? I've been scaling in all the way down. Should I get out? I'm kidding.
Yeah,
the
gotcha.
Australian 100-year bond.
And by the way, I heard, what was he saying? The New Zealand yen? I couldn't even find New Zealand on a map, so I don't even know what to tell you there. Anyway.
Yeah, it's a haven. I've talked to people, like, where do you want to be when the end game is here? And New Zealand's one of those places, but they don't let many people in. So, okay, let's look at this chart you have up here. So you're looking at a reversion to the mean here. Will they both kind of move in opposite directions to meet each other somewhere?
Well, let me say it better not revert to the mean, or the NASDAQ's going to be down a couple of thousand points from here.
Yeah.
And look, every day, I have one screen of like Square and PayPal and F5 networks and Fortinet and all these NASDAQ stocks that are in different levels of bear markets. I have a bunch of NASDAQ stocks that just topped out in the last 6 to 12 weeks. But the one thing that
one of them.
Pardon?
Amazon, one of them.
Amazon would be one. Microsoft is one. I'll go through a couple in a minute. But my main point is
Seven. Yeah.
My main point is I'm just looking at this, and I don't think I have ever seen a divergence with the breadth and advanced declines of an index versus what the index is doing. And it should be obvious why. And I say every day, they better not get the big 7. It's actually 10 stocks. Costco's in there, which is at a yearly high also. If they ever get them, look out on the NASDAQ. The question is, do one day we wake up and they put a bottom to the NASDAQ breadth and the advanced declines and all the crappy charts? Or is the other thing? And if it's the other thing, we'll be ready and we'll know, because you just said something on NVIDIA. Let's hope it doesn't go to 340. But if it does, there's your NASDAQ joining in, because I can promise you it'll be Apple also. It'll be the semis as a group. It'll be the rest of them. So you keep fingers crossed things will change. All I can tell you is it's another new low this week in the NASDAQ breadth advanced declines. And to me, it's just stunning. And the job is just to stay away from them and not lose your you-know-what. That's all.
Okay. All right. Okay. So go ahead. What else do you have?
This week, there's 17 Fed heads speaking. I'm not making that up. The 17 speeches, you got a bunch. These are just all the wild cards. You have a bunch of the earnings. You have, of course, Israel, and my goodness gracious. And all I do is I pay attention. Like JP Morgan was up 7 on Friday and finished up 2. If that's the best they can do, and that's an if, because
that was earnings too, wasn't that great earnings? And they sold into it. Okay.
Right now, if earnings right, then if the market rights itself, I think JP Morgan's going higher. But that's not even a point I want to make right now. So here's the main points, and I wrote them in order. The 10-year yield remains in an uptrend. Notice they've been pulling it back to the 21-day. They're holding it. It's up again, I think about 0.46 this morning. Here's your weekly on the 10-year. And very simply, let me just do a monthly. If it goes higher and breaks through 5 and 5.5 and into the 6s, who knows? That is the cost of capital up and down the food chain. And you know what they say, don't fight it. And the Fed it'll be telling the Fed something also. So be watching that. Of course, the price of oil. You can see what it did off of Israel. If it keeps going higher, here's your airlines, which, by the way, everybody was bullish in June. Cause and effect. So I wrote that down to show you. I had to do this also. The wonderful people on Wall Street decide to they try to start up the IPO business. And what do? They come out with asinine valuation. So here's ARM, 68 is down to 50. Here's CART, they open at 43, it's 25 and change. Birkenstock, they open that up. That was 42 and change, it's 36. So the doofuses on Wall Street trying to start up the IPO business, which is a big help to their business, decide
Right.
let's be greedy out of the get-go and screw ourselves when all's said and done, and it's going to be tougher to do IPO. So I just had to mention that also because you know how
Wasn't
much I love
Instacart also a failed IPO?
here. I just showed it.
Oh,
Opened it at
okay.
They opened it at
Wow.
$30 deal. Opened it at 43. Closed at 33 and change, and now it's 25 and change. The
So all
dummies.
the insiders sold the opening and got liquid. That was
I'm
their
sure.
exit.
I'm sure they had some fun.
Yeah.
Next thing I want to show, and I'm really not going to show anything good today. Look, I believe in real time. If things change, I deal with it. And believe me, every day I'm looking for better in the market. I'm looking for something I can isolate, it's something I don't have to look over my shoulder. And all I can tell you, you know, the market's not that great when you buy something and it goes down. And you just have a lot of that. You have a lot of failed breakouts. And just in last week, you have a bunch of breakdowns, which I'll get to in a second. So here's the strength right now that should be obvious. There's your Lockheed Martin off the lows, but there's nothing I can do with it because it's fluid. I just stay away and let it move. LHX and just remember, these are in bear markets. Northrop Grumman.
Yeah.
So they're coming out of their slumber, but do you trust? If something good happens out of the Middle East, let's hope they come right back down. Oil prices on the move, back above the 50-day on the USO. But here's a problem with that. For every FANG, which is at new yearly highs, I have a Chevron that hasn't budged. So you got to be very specific and very particular. And if you look at the ETFs, XLE, I call it mushy. XLE, XOP, they've bounced up, and the OIH, there's not much I can do with it, so I basically stay away from it.
Okay.
After that, I got a sprinkling.
XLE, if it ever took out 84, would have some problems.
Oh yeah, and what's funny is, you know, I always look at Warren Buffett's been buying, it can't get out of its way. We'll see. Right now, I just call him in the middle of some range, and we'll see what happens. But as I scan, and it's easiest to be quick by doing this, by going ETFs. Here's housing that just topped. And you can see the process of a bearish phase where the 50-day flattens out, now turns down, and all rallies. This is the bearish phase.
80 was the breakdown, and it rallied back to it. Right.
And here's the utilities. And just, I'm just going to go real quick. These are all downtrends. Here's materials, some worse than others. Here's industrials, some worse than others. Don't ask me what's going on with consumer staples and things like Kellogg and Post that they basically crashed, and Hershey's. I wouldn't own them except for bounces. The transports, I'm just, working. I'm looking for bull markets. The junk bonds, the HYG, the real estate. And just remember, I'm looking for bull markets, and all I'm finding is downtrends. Here's biotech, XBI. Here's retail, XRT. Here's steel, SLX. So here's the regional banks, KRE. And they better hold in here. So we're just looking
to 35.
Yeah, we're just looking for bull markets.
All right, well then put up GDX.
Well, I was about to do that last. There's your GDX. Now, I wouldn't call that a bull market yet. I would call it.
Agree.
I call it the wake up call. And
very good.
The one thing is gold seems stronger than the stocks. I want to see the stock stronger than the metal. But the definite wake up call there. And it did it without the dollar crashing.
That's right.
So should be obvious that's geopolitical. and we'll see what happens. I have some clients that own gold only because they want it. I haven't bought any yet, and we'll see what gets taken out. But my main thrust is, here is the last week, and just a little list I made. They topped, and this is before earnings. Marriott looks top now. FedEx, which was hanging in there, looks topped. There's a bunch of stocks that now look like this from last week as we go into this week. And it's worrisome because these are the things that were holding up best. PACCAR breaking the 50-day. And again, notwithstanding earnings. And then I'm just going to thumb through Airbnb. Look at these tops in place on just so many things. SAP, a very important software name. Don't break the 200-day. Here's Oracle, quite the important. These are just like old tops. And I can sit here and do a few hundred for you, but I'm not. I wish I had better things to say. I just don't. Emerging markets remain dead. Here's China. But in China, ETFs, I've got an EDU, which is strong. But I have an Alibaba that is dead money. But
so you know what you've said, one real great point, and it's like that when you trade commodities too. You could have the sector right, but not the individual stock or metal. So you have to get everything right, not just the sector, not just direction, but you have to be stock specific to get it right. Which is
especially in
tough.
Commodities. With oils, I could show you a bunch of oil stocks that look like caca right now. And in the China names, you be careful. Look what they did to EDU when China didn't like the education stocks in 21. They only went down 95%. So I'm always wary of China also. And again, I can show you a drug stock like Pfizer that has been crushed, but a drug stock like Lilly on, I guess, the weight loss stuff. So there's a mixed bag, but overall, it's gross. And
reversal.
I just have needles in the haystack as far as what I would call good charts. Meta, really good, great relative. I bought it perfectly. I had to sell it Friday because I'm not giving back all the latest buy, and great relative strength. But there's Meta, and here's just in the big names. Here's Netflix. So here's Apple that continues. Everybody loves Apple, but relative strength. And by the way, it's an 88 relative strength, and the stock's done nothing. That tells you how bad the average stock is done. So
I think it's lower. Their sales aren't going too well in China, and I brought it up during the show that if you lived in a totalitarian regime and the government was only using Huawei phones and banned iPhones, would you buy an iPhone?
Yeah, it's all I can tell you is the stock no go right now, and I stay away. But my
180 was big.
My main point is I scan 1,500 stocks every night, and I do it with no bias, with my head down. I actually look at the chart first, the symbol second, even though when I look at the chart, I know what it is already. And, I can find, here's Sprouts Farmers Market, but I can, for every one of those, I can show you 50 on the other end. And all I can tell you is that be careful here. If the market is so much worse than the big indices, which takes me to the Russell.
Yeah,
and
1,400.
Again, there's your Russell, there's your S&P 500. It's just amazing stat how much the Apple, Amazon, Google, Microsoft, Nvidia, Tesla, Broadcom, we'll throw in Adobe and Costco, have an effect on those major indices. They're gargantuan. So don't know what to tell you there. All I can tell you is the average stock is that much worse. What I'm watching for with the NASDAQ is It's having trouble around the 50-day. We'll see what happens. Do not break 13,000, or that's going to tell you everything about the big guys. The NASDAQ 100 is the same, but then I just look at the Russell 2000. Yeah, I go back and forth 100 times just to make sure I'm not nuts. Here's your Dow, just channeling. It's 30 stocks, so it can get better for all we know. I just think you be cautious, be careful. And if you ever did what I did a webcast last week and showed 300 stocks that were at highs in the last 6 months, NASDAQ type things like a Redfin, and there's just a ton of this, a ton of that, and it's stunning. It humbles. It teaches you, get the heck out if you see the tops. And I'm just playing it very safe right now. I've stayed in the mega caps. I've made a little hay, not much.
So where are you parking money with your forecast on the 10-year? Are you buying any bonds in here, thinking there might be a flight to quality if we really get going to the downside?
Most of my money's in 5% money markets, and some people bought 1 and 2 years. I'm not going out long, just in case. The trend in yields is still up right now. When that changes, it'll show itself, and I'll deal with it. Also we got to watch things. If things work out in Israel, I think we can do a little better. But I got news for you. A lot of these tops in a lot of these names took place way before what's going on in Israel. And again, I can do ON. I can do hundreds of these that are in downtrends. And until the market turns into what I call a real stiff uptrend, it's just needles in the haystack. And again, there's a few names. Here's this TNET, whatever they do. But overall, yikes.
Yeah, I mean, the market basically topped late July, and now we're mid-October. So it's taken a lot of these stocks 2-3 months of distribution before they started looking ugly. And so now this is the result of what's happened over the last 90 days, August, September, October. Yeah, about 90 days.
One other group that's acts the security software, CrowdStrike, ZS. I'm going to show a few. Palo Alto Network, QLYS. But just remember, if things worsen, they'll get them too. So we're just very careful. The one thing I am best at interpreting uptrends versus downtrends, and most every area except the few mentioned early downtrends, and I will be patient and wait for them to stop, turn, and then deal with it. And just right now, I just think you got to be careful, or man, oh man, it's been pretty icky.
All right, Gary, we have the drift. Great presentation too. Thanks for sharing your stock screen. You can follow Gary's work at Gary Kaltbaum on Twitter. Use his Twitter for some intelligence gathering. And where else can I send viewers to pay attention to what you're saying?
GaryK.com. I have a thing that it's just a service where we do webcasts like this every night. And we don't tell you, we show you, and we provide lesson after lesson after lesson. And again, with no bias. Most important thing I can tell you, as ugly as I think things are, and not think, I know, we know that if the market decides to change, it's going to. We do not dictate to the market. We're going to let it dictate to us. So if we think in a week from now, oh, look at this, we will deal with it. We will move with it. The great line is we don't predict, we interpret. And so far, the interpretation has been like, my Giants played better last night, but let's call it my Mets team. So just we're just going to harp on the good, stay away from the bad, which is the plethora of stuff. watch the 10-year, watch oil. If both keep going higher, that's trouble for earnings, trouble for profits, trouble for margins. And now earnings seasons will dictate policy, and we'll figure things out and go from there.
So Gary, you're an RIA, and that's your business model, managing
Yeah.
money, right?
We manage money and have this little service that's really big now, where we teach, and we have funds and hedge funds as clients, and what we always tell, especially the mutual funds that follow us, if you have to be fully invested, you better be here and not here, and that's the gist of it.
Okay. And so that's open to the public,
Oh, yeah.
subscription model?
Yeah, GaryK.com.
Okay, Gary K. Gary K, thanks for showing us the way today.
Good luck
Hey,
to
hey.
everybody, and prayers to the Middle East. That's all
Yeah.
very tough week.
Yeah. So, Gary, thanks for coming in here today and sharing your biases and your views, and always appreciate, I see things when you're here that I'm not paying attention to, and picked up a few goodies from what you were talking about today. Thank
Hey,
you.
but
my
the
trading warrior
market's up
brother.
this morning. Yay.
Yeah.
Take
All
care,
right,
my friend.
I have to go get my pom-poms, and I'll talk to you this winter, buddy.
Hopefully for better days.
All right, my trading warrior brother, Gary Kaltbaum, everybody. Follow him on Twitter at Gary Kaltbaum. Check his website out, GaryK.com. And that's a wrap for me. And you could join the team in 19 minutes on the Morning Edge. Don't just count your pips, count your blessings. Adios, everyone. You're welcome. You're welcome, Laura, Sinatra, everybody. Good hunting.